companies are set to kickstart FY22 on a strong note, with most analysts expecting strong growth in revenue across the sector. According to analysts, large cap IT firms could report revenue growth anywhere between 2 to 4.5% in constant currency terms, while the mid cap IT firms are likely to see a 3 to 7% growth on a sequential basis. Q1, as we know, is seasonally a strong quarter for the sector, and add to that, you have an acceleration in digital technology, improved deal pipeline, which is of course further expected to drive IT companies' revenues. Tech companies are also seeing a demand tailwind in terms of companies takeout by clients led by higher offshoring and automation, vendor consolidation opportunities, and traction in small and medium deals, which would further propel demand in the coming quarters. Here's what various brokerages are saying and the things we should be watching out for as far as IT sector's Q1 performance is concerned. First and foremost, the revenue guidance. Infosys is likely to raise FY22 revenue growth guidance to 13 to 15% given the strong Q1. HCL Technologies is likely to provide a formal guidance range of 10 to 12% revenue growth for this fiscal. Meanwhile, Wipro is likely to guide for 1 to 3% QOQ constant currency growth in Q2 FY22 in the absence of a large deal win in Q1. We expect companies to retain their EBIT margin guidance to earlier stated levels as well. Analysts expect EBIT margins to decline QOQ anywhere between 30 to 200 basis points for Tier 1 IT companies because of a full quarter impact of wage hikes at TCS, Tech Mahindra, and even partial impact at Wipro. There was higher wage inflation due to supply side pressures given that attrition inched up across companies, barring TCS. There was increased hiring efforts across companies resulting in moderating utilization levels, and finally, rise in subcontractor costs. Apart from that, we also need to watch out for things like progress on large deals, pipeline and bookings, attrition and subcontracting, and commentary on the supply side factors. Also watch out for pricing and delivery mix outlook, and finally, core verticals performance and their individual outlooks is also important to watch out for. Talking about the earnings, the first one to hand in its Q1 report card as always will be TCS. The IT bellwether is expected to deliver 3% QOQ constant currency growth led by seasonality, expanded scope at clients, led by investments in the growth and transform agenda, and ramp up in $50 to $100 million deals won in Q3 and Q4. Despite the FY22 wage increments being rolled out from April 21, EBIT margin decline is expected to be limited to 100 basis points due to slight rupee depreciation and growth leverage. What are the key monitorables? Well, watch out for outlook on IT budgets at clients and medium-term sustainable growth rates given that we're at a cusp of the technology adoption cycle. Outlook for BFSI, retail and manufacturing segments, and of course Europe markets. Comment on the deal pipeline and activity on large deals should be watched out closely, and sustainability of EBIT margins in light of recovery in travel costs and rising supply side pressures. These essentially are some key points to watch out for. Meanwhile, looking at the overall IT picture, brokerages expect IT stocks to continue trading at premium valuations given the order pipeline and digitalization. Infosys, Tech Mahindra and HCL Technologies are the top consensus picks. Kotak is constructive and recommended Infosys as the top pick, followed by Tech Mahindra and HCL Technologies. MK, which prefers Tier 1 stocks over mid-cap, says its pecking order is Infosys, HCL Technologies and Tech Mahindra. ICICI Direct prefers Infosys among Tier 1 companies and Mindtree and Coforge from the mid-cap segment. Among large-cap players, brokerages like Infosys as well as HCL Technologies.